You've proudly served our great country in the military. How amazing would it be to build generational wealth with home ownership through a special VA loan benefit that doesn't require any down payment? But here's the deal, right? You don't want to spend irresponsibly on something that you can't afford. In other words, you don't want to be house poor owning a home when it really owns you. We'll break down an overview of the VA loan, 3 different income scenarios related to qualification following a simple formula that anyone can use to see how much home they might afford based on income. We'll also discuss important factors to consider when purchasing a home and utilizing your VA loan benefit. And at the end, I'll even give you a free VA loan home ownership guide to simplify the process. VA loans don't require a down payment and don't have private mortgage insurance, referred to as PMI, and they oftentimes come with lower interest rates when compared to conventional loans, in my experience, anywhere from 3/8 to 3/4 of a percentage point. VA loans use something called debt to income ratios, or DTI, to calculate how much house you can afford. DTI compares your monthly debts to your gross income. Now, VA guidelines generally allow DTIs up to 41%, but there's flexibility based off of compensating factors, things like credit scores, residual income, that may even allow you to go higher. Now that you know a little bit more about some amazing features of the VA loan, let's have a look at 60K, 80K, and 100K salaries and how that affects your purchasing power. The scenarios that I provide you today are certainly not a one-size-fits-all, and it's important for you to analyze your own budget, right, to determine what the ideal monthly mortgage payment is for you. That said, I'm confident with these easy-to-follow steps, you'll be able to use this simple formula to get a better idea of what you would qualify or possibly qualify for. VA is typically looking for a 41% debt-to-income ratio, so factoring in things like $500 a month for liabilities in each scenario is something that we're going to do. Know that it impacts your purchasing power if those go up or down. We're also using an average of the 30-year fixed rate today at 6.25%, meaning that interest rates can vary dependent upon several different factors, for example, market conditions, credit scores, etc. Nevertheless, I'm confident that this framework will assist you in calculating real-world affordability. Good to go? All right, so let's start with a combined household income of $60,000 per year. That breaks down, you're doing the math, $5,000 a month before taxes. Now, let's take it one step further and calculate. 41% of $5,000, that gives us about $2,050 for total monthly debt obligations, including your mortgage payment. Subtract out $500 for things like auto loans, credit cards, student loans, etc., and you're left over with $1,550 a month for the mortgage payment. So based off of today's average interest rates and VA guidelines, $1,550 a month might afford you a home price of or around $210,000. This assumes no down payment. Now, keep in mind that depending upon the location of the property and condition of the home, tax and insurance amounts can vary. Next up, $80,000 in household income, which essentially translates to $6,667 a month. Here's a look at how the math works. 41% of $6,667. That gives us $2,733. Subtract out the $500 in liabilities, you're left over with $2,233 real-world mortgage payment. With that budget, you could afford a home priced at or around $320,000, once again, depending upon taxes and insurance. Household income of $100,000 translates to about $8,333 a month. Using, once again, that same formula, 41%, $8,333, that's about $3,416 for a total monthly payment. Subtract out $500 in liabilities, you're left over with about $2,916 for the mortgage payment. For, once again, a VA loan, you could afford approximately at or around $425,000, assuming no down payment. Now that you understand what VA lenders look for on VA loans, keep in mind that these estimates depend on a few key factors. For example, we've discussed interest rates, and they can vary, right, depending upon day of lock, market conditions, and credit scores. Even a small change affects your affordability for better or for worse. Property taxes, these vary widely based upon location and can impact your monthly payment. In some cases, 100% service-connected veterans, depending upon the tax locality, may even be able to have them waived. Also, residual income requirements. The VA also checks if you have enough money left over to covering the debts and living expenses, referred to as residual income. Once we've drilled down a range of what you feel comfortable spending, my recommendation would be to consult with a mortgage loan originator who specializes in VA loans, who can get you pre-qualified and on the path towards home ownership out there looking for property. If you'd like to schedule a free preliminary VA loan mortgage consult with me, I'm going to open up my calendar, making a link available in the description below. Oh, and I almost forgot. I wrote an ebook answering the top 11 questions on VA loans. I'm going to make that available as my gift to you for watching by clicking in the description below. So there you have it. If you're earning 60, 80, or 100K, now you have an idea of a price range that might be worth considering when utilizing your VA home loan benefit. My name is Jimmy Vercellino. I'm a mortgage loan originator. I specialize in VA loans. I hope that you found this information to be of value. We'll see you next time.